And we're live. What's up? Welcome back to the Crypto Kindness channel. My name is Jeff, and today I've got a friend of the channel, Jake Sharpe, Inke knows, cashflowforlife.io, the man, the myth, the legend, the person that nobody knows where he's from, but everybody wants to know. How you doing, Jake?
I'm doing good. Back on the channel. I'm excited for this one.
Yeah, me too. I got to say that your background is kind of plain. Usually when I'm streaming with you, there's like some fancy new VRBO that you're in, Airbnb or something. This one just kind of looks like you're in an office somewhere waiting for an interview.
Yeah, I mean, it's still an Airbnb. It has a pretty big ass ceiling.
Okay.
But yeah, the background is boring as hell.
So PulseChain, I'm just gonna jump right into it because I know that both of us have things to do, places to be this morning. You've got more consulting to do, and I've got a day job. So what are your thoughts? I'm just going to jump right into it. What are your thoughts on what Richard was saying and or the lack of what he was saying during his time at the end of the Hex conference?
Yeah, when it comes to the PulseChain updates, after like the Hex conference, I saw a bunch of people being very worried because he didn't understand much of what was going on. But if you understand anything about development, it's normal because they're just currently working on dev operations, which basically makes it easier for developers to onboard into the ecosystem, or for developers to make changes in the future, or to manage different versions of the software. And that stuff is just stuff that happens devs between each other. Because I used to be part of dev teams. I actually led software teams. That was kind of my day job before business and stuff like that.
Yeah.
And DevOps, usually the founders don't understand DevOps. It's purely for developers. So the fact that he was reading it off to Telegram, I'm like, yeah, I kind of understand what they're doing. And of course, Richard Hart wouldn't know because he's not a developer. Like, he's not in there.
Okay. I thought he was a developer. I mean, I don't know him. So, he developed Hex, but did he develop it or did he pay somebody to develop it based on his parameters?
Pay somebody, yeah.
Okay. So I guess I was under the assumption that's one thing I didn't know is that he's not a developer. But what about his body language? The thing I noticed the most is he just seemed disinterested to even talk about it. Like, especially when he was talking with Maddie, he's like doing this type of thing. And like, he seemed almost like disinterested in talking about it, but also not engaged. So I think that's where people read it. I mean, you watch the price of Hex drop 20% when he's sitting there talking and like, I don't care, whatever, I'm not interested type of situation. It just seemed really off to me.
The thing is, I don't think he's in a rush because, in my honest opinion, it's still market timing. So if it's finished in a week or in a month, it doesn't really matter because the bear cycle isn't over yet. To me, 2023 feels a lot like 2019 when it comes to an accumulation year. And if he wants to launch at the bottom of a bear market or the confirmed bottom of a bear market, then he still has time. So all of the dev stuff, and at some point, like with the developers, we experience the same. Like, development just takes long, and there's things you don't know, and it's the things that you don't know that kill you. It just takes way more time than expected. And I think he's just like, yeah, it's ready when it's ready, because you cannot put pressure on developers, because pressured developers create faulty code, and faulty code leads to massive amount of money lost. So you cannot pressure or micromanage developers because it ends up being extremely bad for the software.
So are you telling me that developers are kind of like a snowflake bunch? They're really sensitive.
Who knows? I know. Bretep on Twitter, one of the PulseChain developers. I like him. He's public on Twitter now, and they seem like great people. Dev Kyle also had more GitHub activity again, and Dev Kyle, smart. That dude is smart. I like the developer team.
Yeah. Now, the developer team, do you know how many developers are working on it? Is there a way for us to see that?
At least 4. I don't know the exact number. Depends on if they're public or not, because they could just be doing public commits through one account instead of all of their individual accounts.
So I guess that's one question. You look at the Ethereum team and they've got hundreds of developers working on everything that they're trying to do. Now, of course, sharding is a pretty big deal. So you need a lot of brain power on that. But 4 developers to develop a layer 1, it almost seems like that's understaffed. And that's a conversation that a lot of people have been having. Like, why you've got all this money sitting there in a sacrifice? Why aren't we hiring more people to hammer this out?
Yeah, and that's actually a very common misconception. Like in the software world, there's this saying where large software teams always create the worst software. It's always these lean, small teams because the way you kind of have to look at it from like a math perspective, developers have to communicate with each other. And if let's say you have a code base and then this developer is working on like a feature and this developer is working on a feature, they're
Mm-hmm.
all like in parallel, which means that they all have to communicate with each other so that their codes don't create faults or errors in each other's code. So there's communication channels. So if you have one person talking to one person, there's one communication channel. If there's three people, now this person can talk to this person can talk to this person, and all of a sudden now you have 6 communication channels instead of one. So the more people you add in, the more exponential these communication channels become, and the more cumbersome it is to actually build something. And the actual core EVM team, like the people who actually built the Ethereum virtual machine and maintain it, is like 3 to 5 people.
Okay.
So that's
just,
very
that's a
common
small...
misconception. Yep.
Well, that's a good point. If you look at any large organization, every time you add more people and layers of management, things get goofed up because there's more area for miscommunication and miscues and things like that. So I know
Especially with
nothing,
dev team.
especially with the dev team. Well, that's fantastic. That's the thing that is most important for people like me and I'd say a lot of PulseChain investors. You know, we don't know that type of stuff. We're here for the tech, right? No, nobody is. We're all here hoping to be rich. We got a good morning from SC. He's got the 777 there. Obviously, a follower of yours. What are your thoughts on this statement? And this is one that we hear a lot, like the lack of communication coming on the development. Should Richard Hart hire a PR person just to keep people updated? I mean, nobody likes to be out wandering lost without a light.
Yes, yeah, I know. That's the thing that annoys me as well. Like the guy has a crap ton of bunch of money. He could just hire like an in-house PR team even or an in-house social media team, but he just doesn't. But after the SEC thing, I kind of started understanding it. Because one of the big things that the SEC was going after was, did Richard pay people to talk about Hex? And the answer is no, which creates a massive protection field against him.
Yeah.
So if he starts having like these evangelists out into the community that are paid, well, now you have an SEC attack factor. So I kind of start understanding why he does it the way he does.
Well, what about, okay, so don't hire somebody. That's a great point, because if you have somebody that's paid to essentially shill, then like you said, you have an SEC problem. There's enough people in the Hex community that will do it for free. Why not just give somebody a lifeline and say, hey, here's the information, get out. I'm like, I think it's KDP from Power City. She's tweeting and talking about it all the time. I mean, she's actually kind of that person, but she was on a Spaces call yesterday with a bunch of Hexicans, and I think it was Jack Levin that was being talked to. She was given huge updates on what's going on behind the scenes with PulseChain. And it's like, why is this random I shouldn't say random person, but why is this person from the community that's not associated with the PulseChain development? Why is she the one giving these updates, which is fantastic. Thank you very much, KDP. But why that? Why not like a dedicated person like Matty Allin? Why not him? He's kind of the face of the Hex, conferences and ecosystems. Give that guy just a rap sheet of things to say on a daily basis and don't pay him.
Agreed.
Yeah. Or you. Let's give it to Jake Sharpe. So then you can get out there with all your beautiful hair and smile and, just make everybody feel good about it.
Yeah, true. I would happily do that. But yeah, I don't know. One thing I do know is the moment PulseChain actually goes live, all of the FUD is going to disappear and it's going to be beautiful again. So I'm not even worried about it at all. Like sometimes people like even in the mastermind, there's like these messages in the community chat of everybody, and it's like FUD, and I don't even pay attention to it anymore. It's just like 1 year in, other year out, 2 days later, people forget about it anyway. Mm-hmm. So it's I'm not even worried about it.
Well, we got some people here. Everybody's got their 777, so they know that we know that these are Jake Sharpe fans. That's awesome. Jake Handy says hello. Good to have you here. Sammy Rabbit. Sammy Robert says, I think they are in trouble. So I titled this, Is PulseChain in Trouble? Because I want to, I don't like FUD, but I also don't like when there aren't answers, and there aren't answers for a long time. People get worried. So I wanted the reason why I titled that, because there are a bunch of people out there that are concerned. So I figure if I put this title out there, those people are going to come in, and then they're going to hear you, Mr. Positivity, talking about, the right way to look at this. And in the discussion we just had, where you're like, yeah, you don't want a bunch of developers. You want a small team, so that way the communication goes through and all of this type of stuff. That's really important to hear. So, but yeah, so Sammy Robert here, he says, I think they're in trouble. So I don't know anything about the SEC. I don't want to make any assumptions, but you said something there that was kind of important that I want to elaborate on a little bit is the SEC attack vectors. So we do know at least that the SEC is looking at Hex. And it would seem to make sense that because Richard Hart is associated with Hex, they're going to look into PulseChain. In your experience, and maybe you don't have the experience to answer this, but what in your experience would be the concerns, would be the things that they would be looking at? And the second follow-up question to that is, okay, so if they're looking at these things, does it mean that PulseChain can't launch because it's violated something, or in launching could create a problem? What are your thoughts on that?
I'm not too worried about the SEC thing, because the way SEC, from kind of first principles way of thinking, is the SEC wants to protect people against scams and miscommunication. So the biggest thing the SEC looks at when you look at the Howey test, because I've spoken to a couple crypto lawyers as well, and the biggest thing is having your own token is not illegal. Having your own project is not illegal. The only thing that is illegal is making false promises and making future price predictions on your project and giving people the expectation of profit. So as long as the biggest attack factor you have in promoting a project or starting a project is the way you communicate with your investors. So if you communicate in a way of, hey, there's no expectation of profit, it's purely decentralized. If you want to see work done, you do work yourself. I will do nothing. If you approach it a pure decentralized way, like for instance, Ethereum has so many goddamn validators and it's so decentralized. Well, it all routes to one place for like, we can get into that conversation. But PulseChain will have a bunch of validators in different jurisdictions, which means that it's decentralized. Will it have a public figurehead? Yeah, but it's just code on a blockchain. And as long as he's not like promising 10,000 X's or promising future work or making announcements on potential future work to be done, like other crypto projects have way more SEC attack factors than Hex, because it's just people talking about stuff that they like and they're not getting paid to do it. There's no shilling, there's no paid ads, there's nothing weird about it. So if there's any crypto I'm very comfortable with the SEC investigating, it's probably Hex and PulseChain. The only weird kind of thing that they could look into is a sacrifice. But then again, it comes down to communication and disclaimers. It's very strongly protected against that. So they'll have a hard time kind of breaching that. And there's way more obvious kind of project they could be attacking, where it's like, they said, hey, you're going to have a profit. So like taking those guys down is like a million times easier than taking our kind of community down.
So I guess the one thing that I think about is that all sounds good, but the SEC can make up whatever rules they want. It's, when they create the rules, they can say, yeah, I know that's what our Howey test is, but we just don't like this. So, and I just wonder, again, not trying to create FUD, but it seems like since those letters went out to the content producers, and thank God I didn't get one, Richard has kind of been really quiet. So I wonder if that's just a protection mechanism. Like, okay, no sense talking. We got nothing to update them on. We don't want to make promises. So time to be quiet.
Maybe. I think people are just looking into it too much. Because also, like, Richard is not in the US. So if something with the SEC would happen, it would just affect US investors, similar to how US people cannot use 1inch.
Yeah.
Use 1inch. And I think it will be something similar like that, where you can also like put disclaimers in of like, hey, people from the US, obviously it's not legal advice or anything kind of advice. You can also just like, hey, if you invest in this and you're from the US, all liability is on you, because we're telling you not to do it. And if you do it, everything, it's your responsibility. You handle it. It's your liability. And then you would kind of just do it like that, because they can only affect US and not other jurisdictions. And yeah, I don't live in the US, so I don't care.
Yeah,
come at me.
That's the big thing.
All
is
over
that
the place.
There's a big concern about the SEC, and it's like that affects such a small amount of people. The other question I have, and this is just spitballing, but it's like, Richard doesn't even live in the US. So how is he subject to the SEC? Now, granted, I know the long arm of the United States government is ridiculous, but I guess they can come after it because people that lived in the US invested in it. So that's how they're allowed to get involved. But overall, so let's just say worst case scenario. SEC says this is a security. Like, how does that change things? Or does it even change things? Because like you said, it only applies to a small number of people.
Yeah, and then people in the US will probably find a way to route around it. As long as it's not like a tornado cash situation, which I don't understand why that would ever happen, it's probably fine.
Yeah. And even being a security doesn't mean people in the US can't invest in it. You just have to have, it's more restricted. You have to, it would limit a lot of people. That would be the unfortunate thing, because you have to be a accredited investor, which means you have to make 300K or more a year and have $1 million worth of net worth. So that would limit a lot of people, but it still doesn't kill the thing. It just changes the investor pool, at least in the United States. So
100%.
yeah, I don't know, but you're just as positive as ever. So that's gone. You're confident that there's nothing to worry about.
I mean, my thing is there still a crap ton of money to be made? Yes. Okay, I'm interested. It's really that simple. I don't care about like all the semantics and philosophy and stuff like that. Like, you have these type of people that still buy Bitcoin because it's the first and it's the biggest. But then you kind of ask them the question, okay, just because MySpace was first, does that mean you still hold MySpace stock? No, we're all here to make money. So is the opportunity for gigantic gains still in the picture? Yes. Therefore, we're here.
Yeah, we are. Just a minute, I got to talk to my sick son.
All good.
Sorry about the pause, everybody. We had a great family vacation between Christmas and New Year, and we brought home the present of every illness known to man. So we've got kids homesick, dogs are sick, we're sick. It's like, oh, that was fun.
That's sick.
Hope you're right. Yeah. Right. So yeah, I mean, so this guy says right now, hope we're right. PLS feels like a shit show. It feels that way. It kind of does. But how much of that is just the fact that we're at the bottom of the bear market and it's like, all right, people are tired, they're bored, they're frustrated. It's natural to think, yeah, of course, no expectations of profit from anything, but there was so much hype surrounding the sacrifice and what was coming and all this stuff. People, including myself, were like, yeah, we're going to make a lot of money in a short period of time. And that hasn't happened. So now it's like the wah, wah, wah. Here we are waiting, bored. It's winter. No one's happy. I think that's why it feels like it's a shit show.
Oh, yes, 100%. And the thing is also like, what is the alternative? It launched, okay, alternative option B. It launched back in mid-May last year, and we just went down with the market.
Yeah. Well, and that's huge. So be careful what you wish for, because you could have. So the way you just worded it, it's like, regardless of what happened, we'd be in the exact same situation right now. If it had launched in May, it would have been a run up and then a dump out as the rest of the market bled. And we'd all still be sitting here complaining that, we were supposed to do so well and PLS is down 90%. What the hell's the problem? It's a no-win situation. So I guess the thought process is, if you're bothered by it, turn off the computer and go for a hike. Like, just don't pay attention to it. It'll show up eventually.
If anything, like people, I like bear markets, dude. Like, bear markets are the best because you can just buy so much money for cheap. Like, I think I first said it on your live stream, like buying dollars for pennies. That's what it feels like, this bear market, especially with the macro conditions. So everybody, like, I was on a stream at Walrus, I think 2 days ago, and he had a great saying. He said, the best thing to invest in a bear market is a job. I was like, yes.
So you can get money to buy quality products. Yeah.
Yep.
The best thing to invest in the bear market is a job. Yeah, I mean, that's true, because at some point you just run out of dry powder, because every dip seems like the final dip, and then you're like, crap, I've got big bags and I've got no money, and it just dipped again. Which that was the big thing that I learned. There was a lot of discussion surrounding probably the bear market's going to bottom out in November, and it didn't. And it's still going down. And at this point, it seems like it's going to go down a little bit more, which I'd like to get your thoughts on that. But I'm out of dry powder, man. I got to go start delivering pizzas or something, because these prices are fantastic. And that just about any crypto you buy at this point, I shouldn't say that because somebody's going to say that's financial advice, but even Bitcoin's a solid 5 to 6x at this point if you buy it now and hold it long enough. So it's like you can't go wrong. You just need money.
Agreed. And time. That's it. Yeah. Like the people who are investing in crypto back in 2018, 2019, let's just say they're very happy. They were very depressed during the time they were doing it because the dip that they bought just dipped further.
Mm-hmm.
And also the way you kind of protect yourself against dip is just use limit orders. Like it's a very simple thing. I'm starting to push it now because just use limit orders. It's that simple. That way you don't have to look at the charts. You can kind of look at the chart, see what it will retrace. Like currently limit orders between 1.4 and 1.95 cents would be good. 1.95 will probably very likely hit. But that way you can put them, you can forget about them, you can accumulate your bag, you can focus on your job, you can focus on generating cash in the real world. Because if you're full-time crypto, unless you have capital generating yield that is substantial enough to fund your lifestyle, you should be generating more cash. It's very hard to be full-time crypto unless you have a substantial amount of capital during a bear market, but you can become full-time crypto during the next bull market if you play it correctly. But now in bear markets, you just want to focus on accumulating cash, deploying it into the market, buying strong assets at strong points, using limit orders. And then, because timing analysis wise, 1 year from the previous cycle top is November 7 to 11. So we're past that. 4 years from the previous cycle bottom was December 12th. We're past that. Now we kind of now we're in this weird timing analysis zone. Like the dip, so the FTX collapse looks very similar to the 2018 dip, I think, where it was 88 days where it just kind of accumulated at that zone and then started the next kind of bull run. And if it does that again, we should be mid-March-ish kind of timing region. So buying now, we have most of the blood behind us. Could it go down? Okay, so let's put it in perspective. Bitcoin went down from 69K to 18K currently. Well, what's 18K to 10K? Like the most of the blood already happened. So I'm excited. Like just timing analysis wise, I feel very safe investing into crypto currently. Not financial advice, but personally, dude, like the amount of risk that we're taking on is so monumentally low compared to buying at the top, and the amount of potential upside we have, especially in this ecosystem, is huge.
Yeah, it's like I heard somebody say it before. It's like right now you're jumping out of a basement window. There's just not that far to fall.
Perfect saying. I like it.
Yeah. If you're investing now, you're jumping out of a basement window. You might go down a little bit, but really just wait longer and you'll get out of it.
Yep. And bull market top is like jumping out of a skyscraper.
But everybody learns. I mean, we've all learned. We've all done our first cycle and we're like, oh my God, why did I buy then? Why did I fall into the hype cycle? Like basically, yeah. So where that leads me to another question, and just educating people that are relatively new is like, what is most important for learning? Is it learning the cycles of crypto so you know where you are, what's happening, what you can expect? Or is it more important to learn the fundamentals of crypto in general? Like, where do you start? Where do you tell people to start?
Completely new to crypto?
Nah, like bought some coins on the exchange, watched the price bleed out, but decided they want to stick around and learn this the next time around. So not so new that you need to explain the concept, but new enough that they don't know why everything has dropped and it seems like no one's interested, and yet have a sneaking suspicion it's going to come back, like that person.
Yeah. So the best way to predict the future is looking at history. And history tells us that assets that have amazing price performance go down 95%. Amazon went down 95%. Bitcoin went down 95% in its first cycle. Ethereum went down 95% in its first cycle. 80 to 95% dips are very normal in crypto from bull to bear. So history tells us crypto always comes back as long as there's a strong community, there's product market fit, there's things being built, and the adoption of crypto is bigger than ever. Like Visa is adopting crypto, Fidelity is starting to kind of build into crypto, BlackRock is building into crypto. Like all of the fundamental kind of statistics are just pointing up massively. And then timing analysis wise, most of it is done. And in crypto, buying big dips, and for a lot of people, if they see an asset go down 30%, they consider that a big dip. But in crypto, that's Tuesday. And
wait, you said in crypto that's Tuesday?
Yeah, that's a Tuesday in crypto.
That's a Tuesday. That's hilarious. It's true.
The best way to put it into perspective is people expect to make 100,000%, but then are surprised if it goes down 90%. Like the downside is what you pay for the upside. And volatility to the downside means that there are low liquidity pools, and low liquidity pools means that the moment the money flies back in, you can see massive price movements with very, very small amounts of economic energy.
Mm-hmm.
And it's just big dips, buying big dips, and big dips in my mind are 80 to 90% plus. We kind of have the saying, like early or distressed. Either you get in early in a project in the first 2 months, or you get in during a distressed phase, which is 80% plus down for blue chips like Bitcoin and Ethereum, and then 90% plus down for altcoins, like for instance Hex, PulseChain, PulseX are still considered altcoins. That's distressed. So if it's not early or not distressed, you don't buy, and it's emotionally hard to do. But there's this saying where when the market is going up, you research. When the market is going down, you buy what you were researching.
Oh, I love that. So now is, I mean, and you and I know this, but like now is the time. You did the research. Now's the time to be buying. And if you didn't do the research, you better be doing it now. Because DCA is the way. I mean, everything has been read for over a year. Great time to DCA. And there was another statement up here. Hex is at a discount. Now we can talk about just what you said about the green candles, and when money comes in, it goes up fast. I mean, we saw that leading into the Hex conference. It went from 1.6 cents to what, 2.6 in a day and a half. People were expecting, I mean, that was kind of a buy the rumor, sell the news situation. People were thinking that if that was going to be the launch of V3, then time to go. And but you can see that swing happening so fast as money pours in. And that's what's going to happen when the next bull run happens, when kind of the FUD's behind us and the macro conditions change to the favorable and money starts trickling in. It's going to be a trickle, and then it's going to be a stream, and then there's going to hit a tipping point where all of a sudden it just goes boom, and it's just green candle after green candle after green candle. And once we're there, you're too late.
100% agreed. Yep.
Yeah. I mean, you might make a 2 to 3x, but your opportunity to make those 10x, 100x returns, you got to be buying today if you want to do that. So, question for you. I mean, let's see. There was one in here that I saw. If you see any questions you want to address. Oh yeah. So I wanted to ask you this question. I already know your answer to this, but Joe Blow says, I'm wasting my money minting Zen. In all of the Zen talks that I've been in or streams, there's a lot of Hex kids, there's a lot of PulseChain people in there that ask questions that give a lot of FUD too. But there's a lot of curiosity surrounding this product. So I'm going to give Zen a little bit of a spotlight in a Hex stream here. So that'll give a lot of people a chance to call me names and say nasty things. But Zen is a completely different type of program, protocol, and I guess thought process around launching the crypto. What are your thoughts on Zen? And I want to tie that into what you said earlier about early and distressed.
Zen, it doesn't fit my thesis for investing, but Zen is one major rule for Zen is you mint it, you don't buy it. If you buy it, you're a dumbass. It's basically the best way to approach Zen. It's just the way I look at it, because it's just an infinitely inflating coin, and the only reason it has price performance to the upside is because there's catalyst events happening in the ecosystem like these NFTs. But the moment that kind of dies down, it's just a hyperinflating token that people just dump on the market and get for free. So I kind of look at everything from a first principles perspective. So if you want to play the Zen game, you just mint it for free, and that's it. You don't buy it. That's sure. Yeah, and you can play that ecosystem. It's just way too active for me, and I don't like it. I'm more of an investor type of personality, and if people have small amounts of money, then Zen could be a good play, as long as you don't buy it. But if you have big amounts of money, I wouldn't touch Zen, to be honest. It's just not my type of thing. But everybody in it, I wish them the absolute best. Like, I think any kind of crypto that makes it interesting for people to interact with crypto is a net positive for crypto. It just kind of feels like a leech play currently because it kind of started in his ecosystem, and that's not Jack's fault at all. Like, he's just hopped on live streams. But yeah, I think they're building, which is cool. I like Jack as a person, but Zen it's just not my thesis. But everybody in it, I hope you crush it.
See, I love that. I mean, it's like, okay, it doesn't work for me, but I wish you luck. Instead of, you should have put your money in Hex, you're an idiot. Why are you like, okay, interesting. But the question I have for you is, it's infinitely, so Zen is, the way it's designed, it's not an infinite inflation. It's a scheduled. So it's high at the beginning and it's going to bleed out over time. So it does become rare, similar to how Hedron is. Hedron's a free coin. All you got to do is mint it from your hex stakes. Now, granted, you have to buy the hex stake, but we've already seen that as soon as Gwei goes above 20, Zen stops being minted. And as soon as we get into the bull run, Gwei is going to be above 20 even on a Sunday night. So the inflation will come to a halt in a relatively, I don't want to say complete halt, but it'll slow down significantly in the not too distant future. But as they continue to build stuff on it and have these burning tokens and reflection tokens and things like that, the biggest thing I see is that it was launched in a bear market and it was never ever sold to a centralized exchange, but it's already on centralized exchanges. It has a ton of noise surrounding it. And one of the things that you say a lot is what's most important? Well, it's the community. And there does seem to be a pretty big community. So, but I appreciate your thoughts on that.
Zen is a community play and a building play. If they stop building, Zen will stop being interesting. And as long as the community is there, it will keep being interesting. But yeah, the thing is, I wouldn't call it scheduled inflation because people can just create bots and inflate as much as they want. So it's not capped inflation, and it's just a play on the gas prices. So if the gas prices go up on Ethereum in the next bull run, Zen price will probably go up because they'll be selling at a loss. So that's kind of coming back to the idea of mint Zen, don't buy Zen, dumbasses buy Zen, and smart people mint Zen. Well, I wouldn't say smart people because it's not like my type of play, but anybody kind of being part of the ecosystem, you mint it and you sell it. I wouldn't even hold it because it's infinitely inflatable and it's not scheduled inflation. I think Trayvon even talks about it, of like you have to mint Zen and then sell it. If you hold it, it's not the best play.
Yeah. Yeah, I mean it's something completely different. Now he did talk about, somebody asked this question here. FR Hexmas. What's that?
He says James.
Oh, James, I see that. Yeah. Now there's talk about Jack building an L1. Let's see. Do you think that hurts the price performance of PulseChain? I think they're completely different. They were. I was on this Spaces call yesterday, and Jack was saying if he was to do it, he would build a very, very simple, very straightforward L1 using, I think he said like the Polygon basis of how quickly they were able to build and stuff like that. It's all, I'm not smart enough to go into the details, but he wouldn't go through the whole copying of ETH2. So it'd be a much more simplified L1. But back to what people want to hear.
That's the power of PulseChain. PulseChain is designed for price performance, and copying it over without system state and the AMM fixer bot is just an L1. But copying it over with the AMM fixer bot and the Ethereum state, people underestimate it. I'm still massively bullish on PulseChain.
Yeah. And it's interesting, I talked about it here, and there's people that are, we got a little bit of discord in the conversation over on the side. People talking about everybody's opinion is Zen is stupid, Zen is great. You know what? Time will tell. But I think, what is your rule? So that's a good, you said distressed or early. So what are your kind of guidelines for distressed and early? If you say be early in a coin, what is early?
First 2 months. And then distressed is down 80 to 90% plus. But yeah, the distress part doesn't even apply to Zen. But just general crypto projects, yes, it does apply.
Yeah, it's too early to call anything distressed when it's only been out 3 months. But so it's beyond your window of early. So even minting for you, obviously you don't do it.
It's Zen is. I personally don't participate in it because it's too active. I don't like it. I have businesses to build.
You got other stuff to do.
Stupid crypto wallets all day long. Yeah.
Speaking of activity, what are your thoughts then on a lot of the other coins that have come into the Hex ecosystem? You've got PLSD, you've got PLSB, you've got ASICs, the whole gamut of, Team and Maxi and stuff like this, which are all kind of derivatives of Hex. And PLSB is not the ASICs thing. That was just airdrop. But there's a lot of activity, quote unquote, you can do just by being a Hexagon, which by the way is awesome. It's super cool to get these airdrops and then do nothing with them and come back 6 months later and be like, oh, hey, that's worth $8,000. Awesome. With the PLSD thing. But are you engaging in those type of things? Or are you just laser focused on accumulating Hex to get into more PulseChain, PulseX? That's an assumption on my part, I should say. Do you go down the rabbit hole of these airdrops and what they can provide? Or do you just kind of leave them and focus on what you're doing? Like, what is your strategy?
So It kind of depends. If you're a small fish, like anything under 10 grand in crypto, then interacting with these airdrops could be worth it. But if you're interacting with these airdrops and you have a substantial amount of capital, like over 6 figures in crypto, maybe even 7 figures, then interacting with these airdrops and getting $50 with the risk of losing your entire stack is just not worth it. So my kind of rule with airdrops is be the last one, first check if they're safe, and then be the last one to ever claim it. Don't be the first. The first people lose their money, and then after everybody has kind of potentially wrecked themselves, then you could claim it. But to me, it's just not worth the risk, in my honest opinion.
Now
And
let me dive
yeah,
a little deeper on that statement. It's not worth the risk. The risk of connecting your wallet and claiming it, or the risk of playing with it.
both. Like because there's this ice fishing attack in crypto. It's called a ice fishing attack. And the thing I don't like about a lot of these airdrops is that they're anonymous developers, and that creates massive security risk, because what ice fishing essentially is you can have a claim website. So in our community, you have the Pulse Police, and they kind of like audit smart contracts to see if there's any malicious code inside of it, which is great, dude. I love it. Like what they're doing for the community is absolutely amazing.
Yeah.
But the issue is they could go to the website, see the contract that the website interacts with, and the contract is safe. But then after they've audited it, 2 days later, they can switch the contract, create a malicious contract. Nobody notices on the website because it's the server it's interacting with. But instead of a server, it's a smart contract in the background.
Mhm.
So the thing that they deem safe could now be malicious. And it's very easy to do. You just talk to a different contract that takes 2 minutes to adjust on your website. So the thing that people deem safe, if it's an anonymous developer, he could just create a malicious contract, link it to the website, and steal everybody's money.
Yeah.
I don't like it. I don't like the security concerns around it.
Now, what about removing permissions? Like if you were to go as far as connect your wallet, claim your airdrop, first step, go into Etherscan and remove permissions, so you disconnect the ability for that contract to interact with your wallet again. Is that something that could be done, or can they still get around that?
That's not the issue. Like, yeah, you can revoke access, which is good. Highly recommend revoking access of token approvals. But then the issue is the contract. Like there are these they're called dusting attacks, where they send free coins to your wallet, and then if you interact with the free coins and approve them on Uniswap, they drain your entire wallet empty.
Yeah.
I just don't like the security concern. So if you can be the last one to interact with something, and you'll protect yourself against a lot of stuff with that. But if it's like a $50 airdrop, I don't even participate. And by the way, there's a guy in the chat. He's called Nick. He says he's all about Richie. I'm not, dude. Like, I'm not a Richard Hart maximalist. I like Richard Hart. You should listen to Richard Hart. But I'm not a maximalist. I'm an opportunity maximalist. So wherever there is the most amount of money to be made, that's what I'm at.
Yeah, that's true. I mean, Hex McKenzie's in the chat too.
I like her.
Oh, I do too. She's awesome. But somebody was giving her a hard time on Twitter, and she's like, I'm not a maximalist of anything. Well, that's not true. She said, I'm a family maximalist, a profit maximalist, and a travel maximalist. I think she missed out on snorkeling. I'm a snorkeling maximalist. I love snorkeling. I know she does too. I've seen pictures, but yeah, I mean, that's just it. Hex is a great place to be a profit maxi because you can be. It offers you that opportunity. But just as you said, you're an opportunity maximalist. So wherever you see the opportunity is where you're going to be. And everybody sees opportunity differently. Like you just said, you're not in the Zen ecosystem. I am. But guess what? We can still be friends.
Of course.
And we can,
I like Jack.
Yeah, exactly. I can lose my ass and you can laugh at me over a cigar when we finally meet up in Europe at some point. Or I could win and I get to laugh at you, but we can still be friends. That's the whole thing. Like what you said earlier is the thing I just really respect about you and a lot of people in the chat too. It's like, okay, Zen isn't for you, or just pick whatever random token. A6 isn't for you, PLSB, whatever. But you said, I hope you do well. That's the right attitude. Like, it's not for me, but you know what? I hope you do really well. And same goes. Like, there's a lot of stuff out there people have asked me to shill for them. And I'm like, no, thanks, but I really hope you do well because that's awesome. But which I'm going to parlay that into the next thing is, where do you place, I don't know if I'm going to ask this question rightly. Goodness, Jeff. Struggling over here, man. Focus in crypto is important because there's so many distractions. There's always a new coin. There's always a new project. There's always somebody like, oh, this is going to be the next moon. How do you stay focused? And Hex McKenzie, same thing. You know, if you want to pop into the chat and answer this question, I know you've been around for a long time, but focus is important. Lack of focus can kill you. How do you stay focused when every new coin is the next 10,000x?
Yeah, so to kind of dispel the 10,000x myth, it's probably the stupidest thing I've ever heard, because there's only ever been 5 coins that have ever done a 10,000x. It's Bitcoin, Ethereum, Hex, Shiba Inu, and SafeMoon.
Yeah. And
So
SafeMoon
yeah,
has ended up being a rug, didn't it?
yep. Well, sort of. They kind of like screwed up their contract and whatever.
Yeah.
I didn't participate in it, but it was interesting for like a case study. And then what was your other question? How to stay focused?
Yeah, just focus and in the level. Like, where do you put that in the hierarchy of importance for doing well in crypto?
The thing is, like, when it comes to investing, like, if you look at the best investors that the world has ever known, they always have a very strong thesis that they operate on, and everything that is not inside of their thesis they ignore. And it's because the thesis has served them well. So people in venture capital, they have checklists that they use, they have teams that they look at, they do background checks on the actual founders and team and the tokenomics. Some people only invest in inflationary stuff. Some people only invest in deflationary stuff. Some people only invest in DEXs. Some people only invest in L1s. Everybody has their own thesis. And like in business, that is saying, like, the more you do, the less money you make. The businesses that thrive and do incredibly well during early stages are people who have one offer that they sell to one market, to one specific avatar, to one specific traffic channel, and they optimize that. And there's an entire book around this is the one thing. Some people in real estate, they focus on commercial real estate, and that's their game, and they optimize for that game. Everything they do is for that game. Some people do retail. Some people do rental. Some people do Airbnb arbitrage, and they just optimize around that game. So everybody kind of has their thesis that they optimize for, and the stronger you stick to your thesis, the more you become a killer in that thesis, the more money you'll make. And the more all over the place you are, the less money you make, I've noticed personally, and it gets me distracted. Yeah, it's just having a thesis, sticking to the thesis, and you'll probably outperform everybody because you have to have back data. So you cannot just be like, hey, I only invest in this stuff if you have no like reason to do that. So you have to have a strong thesis, and then sticking to that thesis will probably serve you incredibly well. So I like deflationary stuff. I love deflationary stuff. That's kind of my thesis. And then a bunch of tokenomics stuff. And then also the thing in crypto is it's not just tokenomics. There's a bunch of great projects that have great tokenomics that just got wrecked because of the team. Like these projects, they start with 30% team tokens, and then the project does well, and the tokenomics do well, and then the team abandons the project, and then they dump on the projects on the community's head forever and ever and ever and ever, and the price does not perform because the team is the issue and not the tokenomics. So people try to discard team and like, oh, it's an anonymous developer. Doesn't really matter. But I don't know. I don't trust that. I don't like anonymous developers.
Agreed. Seems fishy.
Yeah, 100%.
So elaborate then. First of all, you said there's a book about staying focused. Do you know the name of the book off the top of your head?
The One Thing by, I think it's a real estate guy. Gary, I think. It's The One Thing is the book, you'll find it.
The One Thing. I love reading books and becoming smarter. You wouldn't know that I've actually read books and become smarter if you listen to me talk, but it happened. I used to be worse. So I've heard you say, everybody says this in crypto, find the winners and then just go with those. Well, okay. A lot of people thought that FTX was a winner. So what this idea behind find the winner, and I hear it all the time and I get so frustrated. It's like, okay, how the hell do you know you're in the winner? You don't know until it's won with crypto, because it's at the end of the day, a lot of this is like being in a casino. Now you have some history with, like you said, Richard Hart has done extremely well with Hex. He knows the market. We've seen that he can call the Bitcoin top. Did you know he called the Bitcoin top, by the way? 110 people on stream here. If you knew that, I mean, you're in a rare group, honestly. But how do you know that you're in the winners? How do you know that? And then how do you know, like, okay, I'm in the winner, I'm going to go all in? That's the unknown.
Sort of, kind of, yeah. It's just probability. The entire thing of crypto is just a probability game. So you just want to put yourself in the position that has the highest percentage win rate. And then, yeah, could you still lose 100%? But at least you put yourself in the best position possible. Yeah, there's no guarantees at all. And then the biggest thing to look at, like, I like public founders. I love public founders because if you understand anything about identity work, if your reputation is linked to something, if your personality is life is linked to something, you want to see that thing win because that thing becomes part of you. And if you're an anonymous developer, if you feel bad one day, you can just delete your Twitter account. Nobody will care, and everybody will lose money. Yeah. So I like things that are linked to people's reputation and people's identity. Now, and then people will come and be like, oh, yeah, but there's like this public founder at Rugpulled. Yeah, but the amount of anonymous developers at Rugpulled is monumentally larger than public founders that Rugpulled a project. So you want to focus on probability.
Now I'm gonna kind of Monday morning quarterback that statement, and a lot of people don't know what that means, but I'm not gonna bother explaining. A couple of the biggest catastrophic failures in crypto in the last 8 months were all with public founders. So you've got Alex Mashinsky, you've got Sam Bankman-Fried, you've got who's the other guy? The Do Kwon. These people were very public and they just shit the bed. So the follow-up question is, okay, so you got a public founder, now what?
Tokenomics.
We've seen that doesn't always work.
It's tokenomics. So one is, and also first principles of crypto, immutable contracts, no admin keys, like FTX didn't invest in that because yes, public founder, but one, tokenomics weren't that special, and two, it's a centralized entity, so I wouldn't even invest in it. Then Do Kwon had a negative debt spiral with USD, so I didn't invest in that. Then what were the other examples? Yeah, Mashinsky, centralized entity. Then what was the other one you gave as an example?
Do Kwon.
Yeah, so that has a debt spiral when it comes to the tokenomics. So it kind of goes hand in hand. But then
death spiral. I've heard that before. What does that mean?
That means that if the price goes down of something, the supply increases, which means the price goes down, which means less people are interested, so they don't push the price up, and the supply increases. So the demand goes smaller and the supply goes larger, which causes the debt spiral. And then it's only you've only talked about 4 founders. How many anonymous rug pulls happen every day?
Oh, you're absolutely right. That wasn't the point of what I was saying, but the biggest failures came from 4 public founders. But yeah, yes. Rug pulls.
Oh yeah, 100%. But this is the whole like a double-edged sword. Like you have to pick your poison. The reason these public founder failures are so monumental is because they can get adoption because they're a public figure.
Yeah, and they're all good salesmen.
Thing. Yes, 100%.
And one of the things that, I learned in watching all this is that if you look at the ones that failed the most, those were the ones that were marketing the most. They were spending money they didn't have to draw in more money to spend, basically. And that's kind of one of my takeaways from the last bull market is, okay, the guy with the loudest mouth who's saying everybody else is stupid and he's a genius and they're spending a ton of money that doesn't seem warranted. That's going to be fishy. I'm just going to stay away from. Well, actually, you know what I learned is I'm staying away from absolutely anything that isn't custodial. In the sense of I keep my coins.
Yeah, first principles of crypto was massive, especially if you participate in DeFi. Agreed.
Yeah, and this is what I like. This Sante says, these people are hiding in the light. They're putting on a false face.
Mm-hmm. But then you can also play these ecosystems. Like if they're hiding in the light, they'll get a lot of adoption, and then you just get in, get out. You can make a crap ton of money on Luna if you just got out at the right time.
That sounds like trading.
It kind of does, yeah. But that's how, true.
Because I know you tweet all the time about traders are wrecked. So
traders are broke, especially day traders.
Yeah, day traders. Did you play any of those games? Did you play the Luna game?
Oh yeah,
you did.
100%. Yeah, okay. And then because the way I kind of look at that's different. You can be an investor and play the cycles. So I sold a lot at around the bull market top. I think I exited around 59K ish, around that zone, like 55 to 59. I started exiting a lot of my position and going into stable yield farming. Because the euphoria was just massive. And then also listening to Richard Hart, like if there's a very clear euphoria kind of event coming up, like the Coinbase IPO or the Bitcoin CMC listing, like everybody's looking at that one date and euphoric kind of environment, that could be the top. And the last top was just like so perfect. Coinbase IPO, that was kind of like weird. Yeah.
That was a buy the rumor, sell the news. I mean, that was you knew what was going to happen. The money was pouring in. You knew that was going to happen. But so you said you play some of these cycles. You just look for the euphoric events and you're selling a few days ahead of that
timing analysis
event for that reason. Yeah.
It's timing analysis. Like the average bull market lasts 820 to 870 days. So if you want to exit close to the bull market top, you exit around day 750 from the confirmed cycle bottom. So whatever the bottom is, you'll probably know like 2 months later or 3 months later.
Sure.
And then you start counting days from that point. And will you catch the perfect top? No, but will you make a crap ton of money? Yes.
Yeah. And that's the
Yeah.
most important thing. Like, don't chase the additional 20% upside when you're already at the top. Because the risk is a 60% downside.
85%, 95%.
Well, I mean, not in the first month of because like Richard used to say, when it falls out of the parabola. So when you get these long run ups and then all of a sudden it falls out of the parabola on the chart, it doesn't immediately go down, but you start seeing the drop 10%, a little bit of an uptick, and then 15%. It's a slow bleed out, but yeah, it's better to get out close to the top than to try to time the entire thing. So then the $1 million question is are you going to play the PulseChain? Are you going to play the cycle game with PulseChain, or are you just going to hold forever? Or do you want to plead the fifth on this one, if you even know what that means?
I'll play the cycle game.
Okay. Because I know you and I have talked about this before, and especially pertaining to Hex. You're like, well, selling at the top, you got to take taxes into consideration. And then would it have been better to just stake it and keep earning during that time? Are you going to catch the actual bottom? Like, so there's those things to take into account. So
yes,
how are you going to play the game? Or maybe you don't want to answer that.
No, yeah, I do. So, but basically, you get in around the bear market bottom, which would be around the zones that we're in currently. Then you would exit close to the bull market based on timing analysis, and then you would just take your money and go into stable yield farming and earn like 10 to 30% a year on your stable coins, and then wait for the bear market to come back. But I will never exit my full portfolio. It will probably be like 33% max, and then 63%, 66 is just hodl and native yield farming within the actual assets, like Pulse validation, Pulse X single site staking, Hex staking.
Why not keeping 777? 77.7% seems more up your alley.
True.
That's the winning number. So a question there for you, yield farming versus providing liquidity. I don't fully understand the difference. What is yield farming? What is liquidity? Are they the same but different? Give me a knob definition.
Yeah, 100%. So liquidity providing, I don't do, at least not now. Like liquidity, I don't. I like stable yield farming. It's basically, so the issue with liquidity providing is that you have the issue of impermanent loss, which is monumental, especially during bull to bear. So you can generate yield using stable coins on certain platforms, on stable to stable kind of liquidity pairs. So that's why I call it stable yield farming, because it doesn't go up and down with the market volatility, and then you're generating your income off of that. So let's say you have for easy math, let's do 100 grand. Let's say you have 100 grand in stable yield farming and you're generating 15% a year. Well, now you have 15K a year in income. And that's kind of, I like stable yield farming, but not now. Like in bear market bottoms, you want to be building positions, and stable yield farming is something you do once you kind of exit the bull market.
So then here's the follow-up question to that. So like, how do you do stable yield farming while keeping your coins? Because that was the whole Celsius, BlockFi, Genesis model is, stable yield farming will give you 8%, but you got to give us your keys. How are you doing it while keeping your keys? That's a big question. I honestly don't. Are you using MakerDAO, these type of things?
That's cash flow for life stuff. The issue is, if I say it on a live stream, it moves around a lot. Like sometimes it switches protocols. Like if the pools get too big, then the rewards go lower. So it switches protocols. What was the question again? Yeah, with the how do we do the stable yield farming? It depends.
While keeping your keys.
Yeah, that's the biggest thing. No centralized entities. Like not your keys, not your crypto is massive. And in DeFi, you have massive amounts of opportunity to generate yield without giving away your keys. Yeah, that's the big thing, because that's why decentralized entities were very easy for beginners to understand, because like, oh, you send your coins there and you earn yield. Yeah. But DeFi especially when it comes to yield farming, DeFi education, it's a lot harder to understand, because you have to go into different protocols. Then you have to understand liquidity pools and how do you find these protocols to begin with? How do you find the small pools to participate in? What protocols are good? What protocols are bad? What protocols have admin keys? Which one don't? So yeah, DeFi yield farming is a completely different game. And yield on centralized entities, just a hell no in general. I've never done it.
Just a hell no in general. I mean, at this point, keeping any coins on a centralized entity is a hell no in general. Like, buy your stuff and get gone.
Yep.
Some of these centralized entities will like I know Coinbase, if you keep your money in US dollars, not USDC, but US dollars, that is protected. But outside of that, everything else is theirs in the event that there's a problem. So I send money, I buy, I say goodbye. I'm happy to pay them their little fee for allowing me to get into crypto. But outside of that, I keep no money on anything. And it sounds like there's ways to do the yield farming and keeping your keys.
Yeah.
Interesting. And you share all of this in your Cash Flow for Life mastermind group.
Yep. We talked about it on the
Happy to
group
give
call,
you a little bit of a plug, man. Happy to give you a plug.
Yeah. So with the Cash Flow for Life mastermind, there's 4 core things that we focus on. One is the Golden Goose portfolio, which is portfolio of highly appreciating assets where you get very strong entry points into the market. Because in crypto, there's a saying where you can buy the right thing at the wrong time and still get wrecked. So market timing is massive. And then the last part of the Golden Goose is the best way to generate and maximize yield for each individual asset that you hold. Whether we're in bear or bull, that kind of differs. Second big thing is security. Because anybody with a big amount of money in crypto doesn't go on live streams being like, hey, this is my exact security setup. So because of my cybersecurity background, I kind of designed the Holy Trinity security system. A lot of the PulseChain whales use it. I don't hold the coins. It's just like, hey, this is all I use. Set it up for yourself. And then third big focus is project vetting. Like, how do you identify home runs is what we call it. Like, out of every 100 projects at launch, 95 at the trash, 3 to 4 good/decent, 1 to 2 home runs. I operate purely on home runs. Some people do the good/decent, make a bit of money, and then continue kind of doing the home run only. And then the last big thing is off-ramping. Like, once you kind of make a lot of money in crypto, how do you off-ramp it into the real world without getting wrecked? So then we talk about like offshore banking and stuff like that. Yeah, those are the 4 big things that we focus on. And it's one-on-one calls, group calls, stuff like that. But yeah.
That's awesome. We got Money Gang Crypto in the chat. Great to see you here today. Got a lot of people talking. Thumbs up. I like it. Likes up. I appreciate that, Money Gang. There's where did I see this? This is a good shout out too. FR Hexmith says Jake is the one that opened my eyes to single-sided LP for exiting a position. I love some more videos on profit-taking strategies. That's something I can work on. I'm working on doing tutorial videos along with interviews. That's kind of what my channel is focused on, is interviewing smarter people, taking the information they give me and then doing tutorial videos on it. Good. So, I mean, I've grown a lot just by talking to people like yourself and K4K. And I did a video with a guy named Crypto Profeta the other day. And it was like, I walked out of that, like, I was like, what the hell just happened? Like, this guy's a freaking genius. He's been around forever too. I mean, such a smart guy. I'd actually like to get you two guys together on a stream together, because I think you would just chat like this and I'd be over here like writing notes like, okay, this is how I'm going to get rich one day.
I've never talked to him, so hell yeah, let's do it.
You want to do that? Oh, I'll make that happen. That would be a friggin' riot. And you guys both talk really fast, so I'd have to somehow like slow it down so everybody else can figure it out. Yeah, we got this here too. Tony Bonboni says, I made $900 a day at the best time yielding on BSC with 30K. Like, I mean, that's pretty damn good return. What are you seeing? Like, hey, okay, now somebody just called me a dum-dum, so I want to hear about it. You want colorful roadmap and daily updates, really? Then you can apply the SEC straight away. Okay, thanks, Taco Bell.
This is one of those incredibly smart, high IQ guys that just reads the title.
I think he's talking to people in chat. Maybe he's talking to me. I don't know. It's fun. It's fun putting yourself out there. I tell you, it's been a growth learning experience to put yourself out on YouTube and let people just attack you. It's like, oh man, you want to grow as a person? Subject yourself to some fire. Let's see. Okay.
By the way, for everybody, it's saying that it's like stablecoin to stablecoin LP pair. It's not, at least not right now in the bull market. Yeah.
What do you mean by that? Just like USD to Tether kind of stable coin or DAI or any of this type of stuff?
Not even that. Like, if you want to do LPing for stablecoins, you want to have high trading volume, and trading volumes are down during bear markets. So that's kind of the stuff you do during bull markets. And bear markets, you want to participate in different protocols that are not stable to stable LP pairs.
Yeah. Okay. Duke says, Jake, I love when you're on interviews. You share great advice. Yeah, I agree completely. Selfishly, I invite him on my channel so I can learn. That's it. But it's a great way. I mean, Jake has taught a lot of people a lot of really good stuff. Question for you on the Hedron community. People fail to realize that the Hexagon community. Oh, this guy said Hexagon. I read Hedron. Sorry about that. Okay, never mind about my question. But going on with Hedron, what are your thoughts on Hedron? Because Hedron is kind of a little bit of a distraction, but now they've got the ICOSA with the HSI. I mean, you can buy some Hex stakes pretty cheap if you're paying attention to the ICOSA website. Have you played with that at all?
I've played with it, yeah. I understand the ecosystem, but I wouldn't put my money in it. If you were early, hell yeah. If you were a big hex taker, hell yeah, dude. Bunch of free money.
Yeah.
I'm not a hex OG, which I hate. But if you're a hex OG, man, you're just like, ooh, yeah, Hedron. But I don't know. I don't like inflationary tokens. And yes, there are burning mechanisms. But the issue is with bear markets, people get coin fatigue, where there's so many goddamn places to put your money, and there's so little new adoption or new money coming into the ecosystem that people just get fatigued and they just go for the stuff that they know will be around. And that's why stuff like for instance, Desi, I'm not sure if it's still at a discount, but stuff like that is at a discount, even though the fair value is higher than where you can currently buy it at, just because of coin fatigue.
Coin fatigue. That's a good term because there's a lot of that. Like coin fatigue, boredom is really what it is. Like, oh, okay, well, I didn't make any money last week, so I'm going to buy this thing. And then you ultimately give away your available precious capital that should be possibly going into the projects that you know are going to do well when the market returns. So one last question for you. I know you've got places to be as well, but and if you need to go, just let me know. Why are you confident that Hex is going to return in price for the next cycle? We see all the time one cycle coins. And I mean, I have my ideas as to why, but nobody cares about my opinion. They're here to hear you. So why do you think Hex is going to return as a performing coin in the next cycle?
Tokenomics of it are pretty good. But the main thing is Richard Hart. And this is weird to say for like a crypto coin, but Hex is kind of unique in a way where tokenomics are good enough. But then the marketing power that Richard Hart has as a public founder is absolutely massive. And also, like, one of the things that we noticed with the PulseChain sacrifices is a bunch of the mainstream YouTube influencers. Okay, so here's a bit of context. Richard Hart had 80K. So Hex did a 10,000x when Richard Hart had 80,000 followers. He's currently at 300,000. So his growth is not slowing down.
Mm-hmm.
So new money, and also like the people that I hop on calls with are not losers. Like they're deploying massive amounts of capital. Like I hopped on a call with a guy from Dubai. He's a venture capital fund. These guys don't have like small amounts of money. So the amount of money interest that I see in this ecosystem is massive. Then you have a public founder that just keeps building, and the community is strong. Like one of the biggest like indicators of a coin doing extremely well during a bull market is the number of YouTubers talking about the coin. Just from like a sentiment analysis kind of point of view. And because PulseChain has so many sacrifices in it, that when they learn about Richard Hart, they learn about Hex, PulseChain, PulseX. So Hex is part of that kind of thing. I kind of look at Hex as a way to multiply up my position going into the main PulseChain play, and then I'll hold some of it like long term. But for me, I'm in the PulseChain ecosystem. Like that's my big focus. And Hex, I will perform just fine. But PulseChain and PulseX are much closer to my kind of investment thesis.
I like what you said there about paying attention to the noise during the bear market. I mean, the retail people have left. A lot of the money has left. And along with it, a lot of the hopium and enthusiasm. But the noise still out there on Twitter and on YouTube. And you look at the engagement in any of these live streams that involve Hex and PulseChain content creators. I mean, look at this. We're 119 people on a Thursday morning in the middle of the bear market. I mean, that's 119 is not a lot. I've got a small channel, but that's 119 people that are excited about what we're talking about. And it's the doldrums of the bear market. So, you know, you and I have this stream in mid 2024. We're going to have 1,000 people on.
Yes. Yep.
And that's what's exciting. It's like, okay, we're building today. So what are the other communities doing? A lot of communities are building. I don't think Hex is the only one. PulseChain is the only one, but there's a lot happening. And so you bring up a very good point about paying attention to the marketing and the noise that's happening today as to an indicator that it's going to come back.
Yep.
That's fantastic. So All right. I'm going to wrap this up to be respectful of your time. I know you shared with me you've got some things this morning. I guess I want to throw it out to you. Is there anything you want to leave the audience with? Any last thoughts, considerations, things to be excited about, things to not listen to? Like the video, biatches. I love it. Thanks everybody for being here. What do you got? What do you want to leave people with, Jake? Give them some of that beautiful smile, just positive energy. Let's let people head into this weekend like, yes, I am in the right place to be.
2023 to me feels like 2019. 2019 was an accumulation year. If you look at the charts, ask yourself the question, would you have loved to be buying in 2019? If the answer is yes, be keep paying attention now. Use limit orders, not market buying. Focus, build an investment thesis, and only invest in things that pass your thesis. Otherwise, you get way too distracted in crypto. And especially if you have less than 50 grand to deploy. Like a lot of people feel like they're big shots with 50 grand, but you're such a goddamn small fish in crypto. But you should not be diversifying. So you want to, if you have over $1 million, yes, okay, you can diversify. But anything below that point, you just want to find high probability plays. And that's the kind of stuff you get with this ecosystem, because we have hype cycle events coming up. We have catalyst events that kind of trigger a hype cycle. And then because PulseChain mainnet launch will kind of cause a liquidity squeeze into Hex, because it's the best way to get an early play into PulseChain, that will push up the price. I still see Hex kind of going back to the 12 to 18 cent region the moment PulseChain mainnet is here. And it will not be like this. It will be like very slow, kind of up, down, up, down, up, down. Then we'll get like a catalyst event, go a little bit higher. And then the moment we get the liquidity squeeze into mainnet PulseChain, that's when we're going to see the exponential growth. And then it will probably correct down, stuff like that. But just when it comes to high probability plays, this ecosystem is massive during a bear market, because there's only two things that do well during bear markets. One is scams. We don't invest in scams. And the second thing is new projects, because by definition, new projects cannot be correlated to the market. And there's pretty much a hell of a solid amount of history where new projects do 20 to 50x during bear market bottoms.
Mm-hmm.
And that's kind of the opportunity we have here. And as long as you're educating yourself and you have a long enough time horizon, if you expect to become a millionaire in 2 months, please don't. But then if you have a long enough time horizon and you're accumulating during this year, and especially with this ecosystem, I can guess, not a financial advice, that you're going to be extremely happy with the decisions you made today, like 2 years from now.
Nice. So that's it. You're excited about the future. We are in the right place with the Hex PulseChain ecosystem. This is a great community, as it's been pointed out a few times. Nathan Cartwright, Hex McKenzie. I mean, look at all the people here just being positive, encouraging, coaching, teaching. We're in the right place. You're in the right place. This is a great group of people. I'm happy to be here with you all. I look forward to celebrating in 2025 when we're making it rain. And for heaven's sake, take some profits. Yeah.
Yep. One of the last things I kind of want to leave off is, because I see a lot of big shots in the comments, and this community that we kind of have with this whole PulseChain ecosystem, we have some of the smartest people in all of crypto, and you have all of these dudes in comment sections being like, no, that's not how you do it. This is how you do it. Dude, if you're so smart, then help the world onboard into crypto. Instead of hiding behind like an anonymous weird ass kind of YouTube profile name, start a YouTube channel, start educating people. One, it's a beautiful industry to build in. You'll make money doing it. People will love you. You'll build a strong reputation. You can do it under a different name if you want to. If you're so smart, you should start educating people, and it's only good and it's better for the ecosystem. And you can send it to your family, and you can kind of build a reputation. If there's any industry you want to be building in now, it's crypto. Crypto is such an asymmetric opportunity, not only from an investment point of view, but also from a brand and kind of business point of view, that if you're so smart, go ahead and build. You should.
Yeah. I love it. Encouraging
look at
those.
Hell yeah.
Yeah. A complete goofball. And yet somehow here we are.
You
having a good time. Having a good time. I'm having a blast, man. This is a lot of fun. I do it. I love it. I have fun. It's a joy to interact with people. It's a joy to get to know people like you. It's, building a brand, building a reputation. And at the end of the day, as I've got here on the screen from Hex McKenzie, we're all going to make it. So that's it, ladies and gentlemen. Thank you for being here today. It's always a pleasure to chat with you, Jake. Thank you. I've learned a lot from you. I'm appreciative of what you're willing to share, and always with the positivity. We're going to do this again. We're going to bring in Crypto Profeta. We're going to have a lot of fun growing over this year, and we're going to see everybody on the other side when we've all done very well. Stay positive, stay engaged, and keep it real. Peace, everybody.
Peace.